All right, let's do an update on Litecoin. That's Litecoin. That's crypto ticker symbol LTC. I was in the process of staging some of these lines to watch, some of these levels to watch for you guys when actually it started falling while I was setting it up. So at least this one that I put so far seems to make sense. I put it there and showing some confluence. I really wish I would have got this video released at least right before that happened so you could know for a fact I didn't just put this line there afterwards. Anyways, talking about the levels to watch here if you're trading this through the weekend, basically the Bears have been in control ever since we finished off that pump last week. They've pushed the Bulls back down. As far as Litecoin goes, you try to find support right around $51. That's really where it's at. And we've been bouncing in a range between basically like 51 and 51.75, like a 75-cent range. Super small range, not a lot going on there. Super hard to trade and not for everybody. A lot of chop eats people up, and usually to make any money in that kind of chop, you've got to be using, either a lot of cash or a lot of leverage, both of which can be very skeptical, given the environment we're in and the fact that we're just coming off of a pump last week. And until the markets open on Monday and we see which way stocks are going to go and which way Bitcoin and Ethereum are going to go, you're really kind of in a no man's land with these lesser coins like this. These alternative, altcoins that are below Ethereum and below Bitcoin, until you've got direction on those two things, Ethereum and Bitcoin, these things are just kind of in la la land and just going wherever. So, as of right now, you've had this support temporarily through the weekend the beginning of the weekend that you've just lost. And we are grabbing some temporary support right here in this like $50.25 range. And this could be the next area you look for to buy if you're trading these ranges on a short term basis, or, like I said, using leverage on an exchange or something like that. But if you zoom out and you look at this in a bigger picture, a couple things I'd like to mention is that anytime you think you have support, the more time support is broken, the weaker it gets. And we've already broken through the support more than once. We broke through the support during the sell off that we had in the stock market last week, and it wouldn't be too hard to lose this support again, especially in a low volume environment over the weekend when you don't have the big players, you don't have the big whales and institutions and all the major algorithms really working the same. So I wouldn't put too much into this support line. However, it's not to say it won't hold, because like I said, it's the weekend and there's not too much momentum going either way. If you lose this line, the next lines to pay attention to are down here around the 49.20, 49.25 kind of area, or you could call it 49 even. And then down here around 48.25. Literally, I think you'd lose that whole next dollar. You might be able to look left and find that you had support right here at 48.77 from this candle wick. But to me, as this sell off was happening, these are just, momentum plays trying to balance out. It's like, trying to stop a train going one way and the buyers start coming in. So there's a fluctuation on the candles there. And this is, super low time frame is the only reason you're seeing it. I mean, this is, 15-minute candles that are throwing wicks. If you were to zoom out to a higher time frame, you won't even see a lot of that. Also, that being said, realize that as the Bears are in control and you continue to lose these levels, there's not a lot, back in history that holds you in a really firm place on any of these levels being super safe down below until you get much further down. You come all the way down to 45, and that's why this line is kind of a grayish green. That's more of a, if you wanted to consider buying there, depending on what your time horizon is, or if you're trying to dollar cost average down an older position you had from when the, everything was up higher. And, these are good places to do that. But also, with keeping in mind, not buying everything. Like say, hey, I'm trying to dollar cost average something down. I'll buy some more at 45 to try to bring my coins from 60 or 80 or 100 plus down, and then maybe save some capital to try to buy lower if you come all the way down to the 42 range, which is where your next real support starts to lie. And the ones in green are the ones that are more important. These are the ones where you could really start to hopefully find some real support from history and are really good buying opportunities, especially on a longer term horizon or even short term to swing trade. If you were to, grab a narrative, sorry, that created a dip, and that could be, say, Monday morning, stocks start selling off again. There's your narrative. The stocks are selling, crypto's going to fall. Then you start watching to buy at these levels. You go, okay, I'm going to place some buys at 42, place some buys at, maybe 35 because it's a psychological number, a little up higher, front run it a little bit 36, but right here at 35, 34.93, somewhere around here, you'll probably, get down to these levels if you lose the ones above them. If you lose the 35 level, I personally don't see a lot of support in between when you look back in history. I believe that if you lose this 35 level on a play that has some momentum, and say if the S&P is going down, I believe that over the course of some really quick candles, you could find yourself buying in the 25 range from 35 all the way to 25. If you look back in history, this 23 to 25 range has a lot of confluence with support and a lot of reasons that you could feel safer buying there. You could, look back in history on a higher time frame, and then this starts making more sense. You realize that all these levels up here in red that I'm telling you, you can trade in between if you're scalping, day trading, looking for temporary support, things of that nature, you can look for those up there. But when you look at higher time frames, you realize it's all just a lot of, kind of no man's land in that red area. Where you see consistency is, when you get into these other areas that I've given you, the green and the gray, as better opportunities to buy. You see that, you're really closing and fighting daily candles over the weeks in these ranges. And on a higher time frame, you start seeing, these ranges make sense, and that even when you popped up into these areas, these were good zones to take profit and, wait over the next few days or weeks to buy back down at these ranges, and then sell back up here. If you started back here, you're buying, selling, buying, selling, buying, selling. And then once you break out, same thing. Pay attention to the fact that the way I said these ranges aren't that important. Once a breakout with momentum happened, look what happened. It goes right through these ranges like they're really not that important. You step back up here to this range at about $52, and that starts to make it happen. So, you've got a range below 48 and you've got a range above 50. This in between area has all been areas for, either taking profits by smart bulls or stepping in and, creating short positions by really crafty bears. So you don't want to be playing this no man's land too seriously. These are areas where if you're trying to day trade and scalp on really low time frames, they can work for you. But when you zoom out and look left in history, you realize these are not important areas. If you lose this upper area at 50, then you drop down to, 45 area pretty fast, and then 35 after that. You also can look back to 2019 and look at what happens if this continues to get worse. If Bitcoin ends up losing, this 18,000, 18,500 range, and you see it drop below that, well, you can expect to see Litecoin end up down in these areas pretty quick. And this is where you should hopefully be able to find some legitimate support and something you could kind of count on. If you zoom out even further and you go look on a monthly chart and you look at the history of this thing, that didn't go quite how I wanted, did it? So you go back here and you look, and you take out all the kind of the distribution noise in between, you can very simply kind of start to see with the closing bodies of the candles. Don't pay attention to the wicks too much. It's all kind of nonsense. You look at the closing bodies of the candles and you find your areas of importance. You find, the 45, you find up here in the 52, 53, you find down here, 38, 40. Down here you've got, 30, 32 basically, and 30. So I mean, these are your areas of support, and where these wicks have come down to, These are the areas that have turned out to be the best buying opportunities of your lifetime per any of these bear markets or rally crashes that happened since 2019 all the way up until current. So not only is it good to have those in your mind so that you have, some sort of sense of security with where you will go when you fall versus just wondering if it goes to, $2 or $5 or zero or something, but it also gives you ideas of where you can feel more comfortable trying to catch buys and then, feel like you're looking like a real superstar, in a few months or a few years from now when you look at a current price at that point. So just always remember, pay attention to what your time horizon is. And if you're trading on a low time frame and you have an immediate time horizon, something you're trying to do right now, then that can be fine. You can try to trade within these levels and you'll find that they give you confluence. You do get, bounces here. You do show support, over here throughout Friday. Friday, you were bouncing in here as support and you had a range where you could have been buying at $51, and I mean it's a small range, scalping out at 51.67. I mean that's not for everybody. This is just chop that eats people up. But it's good to pay attention to these ranges and have an idea of where you're going, where you should be buying, and what you should be looking for. If you're trying to swing trade this over the next week or two, I would honestly probably try to look for seeing if there's some bad news on Monday or if stocks in general just go down and then start trying to grab these, try to grab some at 49, try to grab some at, 48.25, 48.50, and, then you can try to ride it back up to the 51 to 52, maybe 53 range and sell and come back down if we're going to continue ranging until we get a change of narrative for the markets as a whole, and we're not in a complete downward trend in the S&P 500 and the Nasdaq. We're not in a bear market. We're not continuing to talk about high inflation and a recession, which will, before you know it, you'll be hearing words of depression. At the rate this is going, I would expect to hear depression by the beginning of next year sometime. And I was telling people when everyone was still euphoric about everything going up earlier this year, and some of my friends were buying houses, and I was telling them not to. I was telling people that, by Q4 of 2022 to Q1 of 2023, you'll be hearing the word recession and you'll be hearing the word housing market crash. Well, it happened almost a little early. By Q3 of 2022, we're already hearing those things. And, I think that's going to fast forward the other things I've said too. I think that by the beginning of next year, you'll be hearing the word depression, and we will be full on discussing how deep this housing market crash is going to go that we're still kind of pretending isn't really happening. And we'll realize that it's going to be, as much as they said we'd never have a '06, '08 style crash again, I think we're going to have something kind of worse, really, because we've got multi black swan events happening at the same time. It's not going to be just a housing market crash. We've got an equity market crash. We've got a credit market crash. We've got an auto loan industry crash coming that no one's even talking about yet. I mean, there's just so much going on. We've got continued escalations with war, prices on oil, inflation issues, as well as, mark my words, I think that sadly, I don't want these things to happen, but I think we're going to continue to have escalations with not just the war we're already talking about, but with other wars with other countries, not necessarily us having them, but other countries having wars with each other over the course of coming into 2023. And all of these things will continue to bother supply chain issues and will continue to raise inflation, which will, bring down stocks, bring down cryptocurrencies, and be trouble for risk on assets. So pay attention to the fact that overall you're in a downward trend. As far as a short term idea, if you're really, really short term, like trading now until, you might sell before the markets open on Monday, I think you might be able to start to find some support on this next line we just came down to, and look for something kind of like this to happen and try to be scalping this area, maybe get up here, start to play with this and come back up here. But then even if this plays out and you start to end up here in this range, not there, sorry, that was a mistake. If you start to end up back up here in this range and we get rid of this, it's not letting me. Well, that was not what I wanted. But anyways, you end up back up in this range. What I would look for is just simplify this, get rid of all that garbage. If you're going to try, buying right here, which makes sense, that's green now. If you're going to try buying right here and trading up into this range right now, watch that you're going to have immediate overhead resistance right here at the 51.66 kind of range. And if you can, get through that, then you've got immediate legitimate resistance that goes back to how things played out last week, even during a stock market pump and everything was kind of going up and looking real euphoric. People are already starting to talk about all kinds of bitcoins going back to 25,000, maybe 30,000. I saw some people posting on Twitter, maybe we're going back to 28 to 32 right now. And what I was telling people is to have realistic expectations and to be paying attention to this. This is what you got. These lines are resistance now. They're here for a reason. You need to pay attention to this and take your profits and when you get them and have capital preservation in mind, because this is not changing, until a real narrative changes. This is not changing until something else changes. So you should expect, even if you do start to feel like you're winning and you get some kind of run coming up into these areas, say we do hold this, for the rest of this weekend, and you start trading in this range, and then you bounce up here and you start holding. When you come up here, I don't care if there's wicks up into this area. I don't care if there's low time frame candles up into this area. In my opinion, you'll still be most likely caught in a bull trap. You will be letting the bears set you up for failure. They will let you get a little bit higher as they start piling on the shorts, and then they will nuke you back down, and you'll be lucky to grab at this level. You'll most likely end up right back down here. And if this is where you bought, you just round tripped your whole investment. You went from seeing profit to now you're back down to nothing. And then if we open the stock market on Monday bad, you'll end up down below this level, and this will turn into resistance, and you'll be down here bouncing around in this area, not even able to get back to normal. You won't even be able to break even. So that's how the game is played, and that's how you get played. So try to have realistic expectations with where your levels are at, where you should take profits, where you should be buying, as well as where you fall to if you lose these levels. If you lose this level and you come down here and hopefully grab this level, then look back in history, as I showed you, when you zoom out, to what your next level is. And in my opinion, if you lose this 48 level, you're going to 45. And if you lose the 45, you'll be lucky to catch an immediate level. I think you'll start falling pretty fast until you get down to those other levels I showed you. Can you trade those on short term and maybe pile in some leverage to a bounce to get out? Yes, that can happen, but a lot of times you get wrecked doing that and you end up losing everything. So just be safe, be careful with leverage, and if you have a longer term horizon, then just be buying at each one of the lower levels. Don't worry about the in betweens. Break your money up into buys. Maybe if you come down here and you get this level, buy a percentage. You lose this level, buy another percentage. I don't think that we're getting to where we have a turnaround in the markets yet. We don't have a bottom in the S&P. So I believe that you'll continue to get more chances to get these great buys. Don't worry that when it comes down and it starts going back up that you're never going to see $48 again on Litecoin. Sadly, I think you will, and I think there's more turmoil to come. I think that even if we get a rally for the holidays, or even this midterm rally everybody wants, and then later on crypto sometimes gets like a Christmas rally, they call it, still you should be looking for taking your profits and looking for more downside coming into next year as they really open the floodgates on the rest of the bad news for the economy. All right, you guys, enjoy your weekend and trade safely out.